What's up guys, Flash here with tradingwithflash.com. In this video I'm going to break down what an ETF and a stock is very quickly and some tips to give you when trading them. Making $100,000. Characters I met along the way that stepped in and are a big part of my story. There, so stay tuned. With an ETF and a stock. So for example, if you trade commodity ETFs, which means say natural gas, oil, gold, things like this, then ETF will move based on the commodity which it's moving. So a stock moves on the price and volume in terms of trading the stock. For example, if you buy a stock of AKS at $5 and you buy 1 million shares up or down, you will see the ticker move drastically. If you do this in an ETF, it won't make a difference to the price because the volume doesn't affect the price. What affects the price in an ETF is the commodity movement behind it, so bear that in mind. Another tip is it doesn't follow support and resistances quite the same as a stock. So in terms of your trend line support and resistances, it's not a great confirmation because it's traded off the commodity moving it, so the support and resistances won't really be relevant, so bear that in mind when trading ETFs. Personally, I don't like swing trading ETFs. That's just my view. I'm a little bit wary about swing trading ETFs. That's just my view, solely because there's another sole reason driving that ETF, like a commodity ETF or a future ETF, that's pushing it up. It's not in terms of demand, price, demand and volume. So anything can happen in that commodity. That's just my overlook on it. There is people in the Learn Plan Profit who have huge success when swing trading ETFs. I just personally don't really like swing trading them, so that's my view on it. Also, I did other videos to explain what an ETF exactly is, how to trade inverse ETFs. So if you want to go have a look at those videos. With a lot of ETFs, when you're trading them, some of them have inverse ETFs, which means it's an opposite direction of a trade of the ETF you're trading. So, for example, UGAS and DGAS trade off natural gas and the supply and demand. So when UGAS, for example, goes up, DGAS comes down. And then when DGAS goes up, UGAS comes down. That overall is a really quick example what an inverse ETF is. Gold also have them in terms of dust and nugget. Oil have them in terms of drip and gush. They trade completely opposites. So if you are trading inverse ETFs, bear in mind what the opposite ETF is doing and bear in mind the commodity behind it that's pushing it. So guys, if you are interested in taking the Learn Plan Profit course, there is a link in the description below and there's also a $25 off discount code. So help me help you. Also, don't forget to click like and subscribe. Thank you.